This is Cathie Wood from ARK Invest. Once again, it's Employment Day. So we like to give you a sense of what we think is going on out there that isn't really being either mentioned or really delved into very much by the media. First, just to summarize what we're thinking, we still believe that there is a tug of war going on in the market from a rotational point of view between value stocks, which are more cyclically oriented, and growth stocks, which include the innovation stocks, which we spend all of our time researching. So it's a very interesting time, and it seems to be centering around the economic statistics that are coming out. So when there's strength in economic statistics and fears of inflation and higher interest rates start surfacing again, we get a move towards value, and vice versa. When there are weak economic statistics or surprising low inflation or interest rates, then the growth stocks tend to have their day in the sun. Now, as you know, we believe this is going to resolve on the side of growth, and maybe sooner than a lot of investors are expecting. There are a lot of very interesting signs popping up right now that we'd like to share with you. But before that, we'll start with fiscal policy. So tomorrow, Saturday, the Senate is going to vote on the infrastructure bill, $550 billion. And it's a sensible infrastructure deal. It's all about infrastructure, which is what it should be from our point of view. Now, the vote, however, has been hung up. It was supposed to take place on Thursday, but it was hung up, interestingly, by some controversy around crypto, how to pay for some of the infrastructure bill with taxes on cryptocurrencies and crypto assets. And we believe that behind the scenes, there's fierce lobbying taking place. We do believe that the financial services lobby is particularly strong and has the ear, especially after the crisis in 08-09, has the ear of a lot of politicians. And so we believe that the tax that they're trying to enact here would really harm the evolution of DeFi, decentralized finance, which is based primarily on the ETHEREUM network, as opposed to Bitcoin. Now, we're not happy about this at all. In fact, we worry that our legislators could, with an act like this, chase away technology from our shores. Already, the U.S. has had a terrible reputation in terms of regulation around crypto assets, partly because there are so many regulators and they don't agree with one another on even what these crypto assets are. We believe they're a new asset class, but I think our regulators have been trying to put them into an existing asset class and treat them accordingly. We are hoping that they will be getting a lot of pushback. In fact, we are hearing they're getting a lot of pushback with voicemail. Who uses voicemail anymore? But voicemail apparently for many policymakers full. It's activated a lot of the crypto community and a lot of the innovation community, because we don't want to chase innovation away from our shores. And I think that if we were to frame this and say, and I'll quote John Lilly, who was on our brainstorm today, if we were to frame this and say, this would be a lot like regulating and taxing the internet in the early 90s before it was really a gleam in the eye of many businesses. That would have been a very bad idea, because the internet has been very good for the US, for innovation in the US, and has added a lot to our productivity and to the productivity of the world. But I think in terms of capital markets, the US really capitalized on the internet. Well, cryptocurrencies and much of DeFi is effectively unfinished business from the early 90s. And actually even earlier than that, when DARPA created the internet. No one at that time dreamed that the internet would have anything to do with commerce, because it was for academicians, it was for intelligence agencies, for government, other government agencies, and it was never intended for commercial activity. Well, that was a miscalculation. And as a result, we never built into the internet a payment system. And we have a chance now to do that and add even more to the productivity of our economy and the global economy. And so cryptocurrencies we've described as really money over IP. And we likened it in the old days to voice over IP, to help people understand, at one point, and this would have been in my life, I never dreamed that I would be able to make telephone calls for free. And it changed my life. My children can't ever imagine ever paying for a phone call. So, and we think that costs are going to come down and benefit the entire economy, the global economy, and that trying to shut it down now would be a very bad thing. And I would say that our regulators then would be blamed as innovation moves to other countries, would be blamed for preventing the US from enjoying the next big thing. So I know that there's a Wyden amendment that is trying to address some of the problems that have cropped up. And so we're definitely following that and hoping that it will succeed. So one of the other things to note about fiscal policy is this $550 billion infrastructure bill might be held hostage, even if it passes the Senate, might be held hostage in the House to the $3.5 trillion bill that the administration is trying to push through as its primary agenda. And it would describe this as human infrastructure or human capital infrastructure. So even if we get the 550 passed, this $3.5 trillion, I think, will be a very long bet, mostly because it will include onerous taxes, which, as we move towards the midterm campaign season, will not be a good look. We do not believe it will get through. So we'll see what happens with the $550 billion infrastructure bill. I do believe it has bipartisan support and probably should go through. And ultimately, reason should prevail and probably will go through.